Bitcoin has been on an absolute roller coaster ride, but it's time to put away all the FUD, it's time to put away all the hopium, and it's time to look at just the facts in the charts and have a realistic prediction on what is going to happen next. Your biggest question is probably, should you sell now and buy back when it goes lower? Is the bull market really over? What the hell is going on with Bitcoin, and what should we expect to happen next? This video right here will help you tremendously with all of those questions. So buckle up. Welcome back if you are returning. If you're brand new, hit that subscribe button right now to have less stress and more success. Turn on the bell, hit the thumbs up button. Less stress, more success. Did you hit that subscribe button? Do that right now. We're going to be jumping in to a lot of heavy details in the charts, and it's going to become crystal clear. We're going to keep it simple, clean, and clear, and you're going to have a lot of clarity after this video. We're also going to jump into this chart. Both charts are incredibly fascinating, and they're going to leave you fulfilled with a lot of information. But you're in crypto because you want to try to reach your financial freedom. You want to go get our free course. This is the number one thing you can have, and if you don't have this yet, you're completely missing out. It's a free course. It's going to help you tremendously. It'll take you 3 seconds to sign up to it. First, go to cryptocrewuniversity.com, link down below. Second, click right here to get your free course. That's it. Then you're done. Go do that right now. Pause this video. That'll be the number one thing to help you. Go there and then come back to this video. Now, we're going to be jumping into the log growth curves. That's what you see at the top of your chart. These log growth curves, simply put, are based on the Fibonacci, right? These complex mathematical equations that really bring light to a lot of the things that happen here on planet Earth. But we're going to start also with the RSI. The RSI on the monthly chart. What I want you to focus on right now is there are 4 circles on your chart. There are 4 circles right here, and then there are 4 circles over here. I want you to focus on the 4 circles from 2013. And then we're going to try to make sense of this crazy price action that we've seen recently. And once we illustrate what we see, it's going to give you a breath of fresh air. And again, just based on the facts in the charts. So peel your eyes over here to 2013. Now we have this red line coming across the top. That's the 76.39 on the fib. Now you don't need to memorize the 7639. You just need to know, like, hey, back in 2013, the market moved too quickly. It was unsustainable to continue moving that quickly. We had 1, 2, 3, 4, 5, 6 green candles in a row on the monthly chart. Sound familiar? That's what we had in 2021. 6 green candles on the monthly chart. And if you watch our channel, which I'm sure you do, we said when we got to that 6th candle, hey, be careful. There's going to be a red month. People are going to freak out, right? So how did we know that? Well, we reached that red line on the 7639, and also we had 6 green months in a row, and also we moved too quickly out of that pandemic. From the COVID pandemic, from that 3,000 low up to 65, that's not sustainable. It's not healthy. I would be more fearful if we continued on that path, and I said that repeatedly on our channel, because it's not sustainable. You wanted to see a pause in the market. You wanted to see consolidation, which we got in our 3 boxes, which we'll touch on here in a moment. But back here, in 2013, we grew too fast, we got resistance from the 7639, and then we fell all the way down to this red circle here. This is where it becomes pretty fascinating, because where we fell in this circle here was actually right below our median line. Our median line is in green, and then we actually breached the first line here and almost reached the second. Let's compare this. Because in 2021, we moved too quickly. We got up to 65, which was that 7639 to the T. And again, this is a chart. If you're new to our channel, you better hit the subscribe button now, because we've been talking about this chart for several months. Warning at the 7639 level. Now, we hit the 7639 level. We breached the median line that's in green. And guess what? we went almost down to this second level here, which is exactly to the T what we did in 2013. The only difference in 2013, that was a 77% correction, and this has been a 56% correction. But let's pull in some more facts from the charts. And again, we're going to peel our eyes down to the bottom where we have the RSI on the monthly chart. Now, when you understand it simply, the first 7639 point got just above this 92 level, right? Just as we did here in our 7639 at the $65,000 level, it got above this 92, 93 on the monthly. Same factor. Now, this candle is 7 days from closing, right? We do not have a close of the monthly candle like we do in 2013. But if you just look at the facts, we hung out around this 72, 73 level. Are you with me so far? Because this is where things start to pick up. From here, we saw an incredible bounce, right? In 2013, we held out just a little bit below this median line, and then that was our parabolic top. That was the pause in the market that the market needed to rejuvenate, right? You can see it more clearly in our boxes. We've got 3 boxes, box 1, box 2, and box 3. All of 3 of them happened in the past 3 cycles. All 3 of these cycles had a pause in the market. It was the only pause in the market during the entire bull run. How do we know that? It was the only pause that had red monthly candles. Red monthly candles here and red monthly candles here. It was the only pause in the market right before our parabolic top, and hopefully right before our parabolic top. Now, also, these 3 boxes have something fascinating similar together. If you look at the first fake out top, it happened inside the box. First fake out top, inside the box. First fake out top, hopefully inside the box. Now, these boxes aren't just, we didn't just put them here. It's all based on math. The bottom of the box is a 1.5x multiple of the previous all-time high. So you take the previous all-time high of about 30, 1.5x multiple gets you the bottom. A 4x multiple gets you the top. We used that same math and applied it to this move, this cycle number 2, and the cycle that we're in. So this is a 1.5x multiple of the previous all-time high, and the top of the box is a 4x multiple of the previous all-time high. That gets you this beautiful chart here. What's in front of you, in my opinion, is the most important chart in Bitcoin today. And this is the chart I really want you to focus on. Because what happened inside of this box is we actually, every single cycle, we bottomed at our base. Meaning, look at these candles here, and we'll go ahead and we'll zoom in. We battled the top of this box, and we came all the way back down to confirm our support at the bottom. We came all the way back down a few candles in the second cycle to bottom out at the bottom of the box. What have we just done? Well, a few candles in, we came all the way back down to the base, to the bottom of this box, to the T. And again, these are not boxes that we just drew today. We've been following this for months. So if you haven't subscribed, subscribe now, because you're completely missing out on some of these big picture concepts that we started telling our followers about months ago. So we came perfectly down to this box. So is this out of the ordinary? No, we did it in the previous cycle in this candle here in July, right? We also did it in the cycle in 2013 in this candle in July, okay? So here we are in May. Here we are. We bottomed out at this bottom of the box. So again, we need to stay even keel, stay level-headed. Now, let's try to make sense of all this, because now you understand, okay, we seem to be somewhat following the pattern of 2013, right? With this 7639 and bottoming out at this fib level, which is the same exact scenario that we did here. We seem to be still inside of these boxes. We seem to be respecting key levels in the RSI, and we seem to be still respecting our market structure. So what does all of this mean? Well, to summarize and to try to keep it really simple, this study here is specifically designed around the 2013. We have a lot of similarities with 2013. If 2013 were to continue to play out, we would see Bitcoin over the next handful of months battle the top of this box, which is about, just under, it's about 80,000, 78,000. So if we were to continue in a normal cycle, the way that we have been for all of these years, in a few months from now, we would see Bitcoin battling 80,000. Now, let's talk about the shorter term. I have 1 point of good news and 1 point of bad news. Keep in mind, we have 7 days until this monthly candle closes. What I would love to see is this monthly candle close above 40,000. And there's many reasons for that, but we'll get into that in a moment. There's a handful of videos I'm going to be making after this to go into different aspects of the chart. So make sure you subscribe with the bell on, otherwise you're going to miss it. But let's take a look at this one. This is where I do have a little bit of concern. This level on the monthly RSI of about 72.5 is so critical. To put it simply, there's never been a time in Bitcoin's history during a bull run that we went below this. It's as simple as that. If we're in a bull run, we never go below this 72 level. Otherwise, it signaled the top of the market. So if we look at November 2013, we had the top, right? Our second one. We're waiting for that second peak. We're waiting for that second peak that generally marks the market cycle top. We just had our first peak. But when we got to this second peak, we went below this 72 level. That marked the end of the bull run. The only time that we did it after that was we battled up here, we held support here, we battled up here, and we held support here. As soon as we broke in February, that was the end of the bull market. We just breached it here, although we still have 7 days to make up for it. If Bitcoin were to get into the $42,000, $44,000 range over the next handful of days, then we could potentially save this breach of market structure. That's my 1 point of concern. Although in a few videos today that I'm going to be filming potentially today, tomorrow, the next day, I'm going to be pointing out a few other concerns. This is one concern with this specific study comparing 2013. In terms of this chart, there are no real major concerns outside of the same concern with the RSI. We still had our critical market structure inside of our box. We haven't done anything that's out of the ordinary in terms of our market structure. We're still holding market structure relatively strong in terms of this chart. Okay, so that's the way I see it. So what's a realistic prediction? A realistic prediction would be that we're going to follow 2013 similarly, and over the next few months we're gonna shock the market. Right now the market is really bearish. Everybody is calling for 20,000 or 15,000 or whatever the number is, but everybody is calling for lower prices. And by the way, if you go to the fear and greed, there's a tremendous amount of fear. There's extreme fear in the market. Those are not my opinions, these are just facts. So everyone's fearful and everyone thinks Bitcoin is going lower. What side of the fence is Steve on? I'm always on the other side. Whatever everyone is saying, I'm on the other side. So I'm pretty bullish right now. Could we drop a little bit lower? Sure. But in the big picture, this is more than likely an incredible time to pick up some Bitcoin. I don't want to give financial advice. I'm not your financial advisor, but I will reiterate. If we follow this chart over the next 2 to 3 months, Bitcoin is going to be at 80,000 at a minimum. Okay, so just keep that in mind and take it with a grain of salt. You shouldn't be using any videos from any YouTuber as financial advice. You need to do your own research, but you always want to be against the herd. Whatever the herd is doing, do the opposite. The reason why everyone is not incredibly successful is that's really difficult to do. Plain and simple. It's really difficult to go against the herd. If everyone is screaming for lower prices, it's going to do the opposite. It's similar to when we were at 65,000 and everybody was calling for us to go to 100,000 next. We were calling for us to have a red month. That's really difficult to do, to be on the other side of the fence saying something that's not popular, that everyone laughs at and jokes about. But then after a few months, people look back and they're like, wow, maybe this guy really knows what he's talking about. And they've been saying that about me for years, and they will continue. So this time, everyone's fearful, everyone's very bearish, and we're on the other side of the fence saying, hey, this might be a pretty incredible opportunity if 2013 continues to play out. So I'm going to be coming back with many more videos, and make sure you subscribe with notifications on. Go get your free course. If you haven't done so already, you're completely missing out. CryptoKoreanUniversity.com. Get your free course in 3 seconds. You will have it. I'll leave you with a couple final words. Don't try to time the market. Don't try to time the market. What does that mean? So many people get caught up. When prices start falling, they have this incredible idea. They feel it's ingenious. They feel that nobody's ever thought about this idea before. They come up with this idea and they say, oh, I know what I'm going to do. I'm going to sell now because I'm convinced it's going to go lower, and then I'll buy back when it goes lower. Guess what? The high majority of those people, for the history of mankind, have got caught with their pants down. I'm not talking about this year or this month. For the history of mankind, everyone's been trying to do that, and they always get caught with their pants down. And that may have just happened to you. That will happen to you. You have to be very careful. You cannot time the market. You need to trade based on a strategy. If you don't have a strategy, you better get one. And you can get one with our free course and our full packages, or do some studying on your own. It'll take several years to really figure things out. Right? But get a strategy. Don't try to time the market. That's Steve's secrets to success for today. Leave a comment down below. Leave a thumbs up on this video. I'll see you right back here on the next video. Peace and love to the fellow underdogs.